G'day folks, welcome back to another update, and today we're looking at the German DAX, which is approaching the resistance again. It's hit it already once before, and the Japanese Nikkei, that's continuing long positions at the moment. Before we go any further, make sure you hit that like and subscribe button to support the channel. We're also going to include some back testing and show you the returns on those. In terms of the outlook for the German DAX, recently closed higher by 1.13%, driven by improved German business sentiment. However, caution is advised as the index is at overbought levels. For the Japanese Nikkei, projected to rise 4.6% by the end of 2025, anticipating stronger corporate outlooks. Currently, it has increased by 0.14% since the start of 2025. So we always start with the long-term trends, and we've got the monthly. And you can see here on the monthly, we're in a downtrend on the CCI, broken below the moving averages. And the price has just actually broken into that moving average range with that wick so far this month. And so that was a result of this bearish divergence we had on the CCI versus higher highs on the price, and that actually broke down early on a few months ago, hit our minimum target range, and that minimum target range was drawn between, if I took it down to that low, you take it back to a significant low before the divergence started, and that was at 23.38% level. It hit it once, bounced out of it, and it's back into that range again, hitting that moving average on the price. But bearish momentum at the moment on the monthly. On the weekly as well, we've got a separate bearish divergence, and that's still declining. That also hit its target range, and that's been fluctuating above and below the price range, and also likewise on the CCI, but that's still declining on the weekly. And on the daily, we hit this resistance up here, this minor resistance at 46.20, bounced down, broke through this minor support at 37.265, and it's currently broken into a bullish momentum on the CCI and also the price, and I'll show you the trading on that. So on the 1 hour time frame, we go long only when the daily is above the CCI, and so is the price. So you'd be going long only. But at the moment, you'll notice here on the 1 hour chart, we did have a bearish divergence here. Lower highs or double top on the CCI versus higher highs on the price. That actually broke down, hit our 23.38% target range. So if we took it down to that low there, you can see they hit the 23.38% level. Hit it a few times, and it's finally resting around the 38% level. Just below that. But notice at the moment the price has made some advance to the upside, and so has the CCI, so we take long trades only. So this is the back test for going long. Again, I've marked it here beginning on the back test for the stop loss approach and the average down approach, and we take long positions from when the CCI and the price break above the moving averages. And that's where these are indicated. So let me just get rid of Fibonacci for a moment. But basically what we've got here is the stop loss approach. The stop loss approach up here, and that's currently down by about $700 if you're taking stop losses out of that, and I'll give you the trading parameters for that at the end of the video, and also the average down approach. Now you would have had a bit of a drawdown here of about 30,000, so you need some deep pockets in your account, so just be careful how you trade the average down approach. But you can see there it's averaged down a few times with maxing out 15 contracts. But again, you would have stayed in the long positions only and let it run, and you'd be up today with 13,874 currently, with a couple of positions still open. And again, the baseline is 100,000 for both the stop loss and the average down approach. And just for fun, I've included the back testing here for the short positions when you would have gone short during that period, when the CCI and the price were below the moving averages. And that's indicated by these starting points here on the stop loss approach and the average down approach. And what I've done here on these X's, I've marked it where the CCI broke into that moving average range. That's where you would have stopped taking trades going short. And don't wait for the price to break into the moving averages, because the CCI gives you an earlier warning. And that's marked by these crosses here on the profitability charts. So you can see there on the stop loss approach, you'd be down about $7,000 plus, or $6,500 on the stop loss approach. And on the average down approach, you'd be up 92,206. That's trading the Japanese Nikkei $5 contract. So again, good rewards for the average down approach, but just be aware of any drawdown. You can see there's a bit of a drawdown there on the average down approach, and that was also a drawdown of about 70,000, down to about $30,000 drawdown from that high there. So this is a German DAX for the long-term trends. On the monthly, it's still very bullish with the CCI and the price well above the moving averages. and it's again reaching new highs. But notice on the weekly, we've hit this double top, and it's having struggles breaking higher on the CCI, and that's a bearish divergence compared to the price making new highs. So just be wary of that. I've drawn a target area there, but it's probably a bit too early to draw it because it's possibly still going to go higher. If that CCI breaks much higher than where it is there, I'm going to invalidate this divergence. But at the moment, it's still currently dropping into that moving average range, in which case I'm going to keep that there for the time being. So somewhat neutral positioning. I wouldn't be buying any more at this point. I'd wait for this to break and invalidate this divergence to be more confident. But again, somewhat neutral positioning on the weekly. On the daily, it's hit this resistance at 23,310 a couple of times. You can see there it's struggling to break above that resistance. Notice as well, that's because of this bearish divergence. We had lower highs on the CCI versus higher highs on the price. I have a target there. That actually hit it once with that wick of that candle on that day. But notice the CCI is still declining, and the price is having trouble breaking out of this little range here. So if we go to the intraday chart, the 1 hour chart, again, you can see here the price and the CCI declined and making a bit of a bounce, although I wouldn't be going long. If anything, I wouldn't be trading any position at the moment, not long nor short, because the price is still above the moving average band, and whereas the CCI is below the moving average band. So it's giving us a mixed signal. So avoid trading at this point until we see a more decisive move either above or below. You want to see a break above that resistance to be more bullish and see the CCI also break higher on the daily, or you want to see the price break below these moving averages in line with the CCI to be bearish on this at the moment. So what I've got here is the back test for the long positions, and the long positions here are started back here when the price and the CCI broke above the moving averages. This is to demonstrate the effectiveness of these strategies. So the stop loss approach here, you can see there we would have stopped the long positions on both the stop loss and the average down approach at that first level there when the price broke below the moving averages. You could have probably stopped it here as well when it broke into that moving average range to be really safe, but just to demonstrate the effectiveness of both. On the first one, it generated 2,373 on a stop loss approach, and the average down approach generated 13,661. So that was the first point. You would have avoided taking any long trades or even short trades during that period, because avoid taking long trades because the CCI is below the moving average, and avoid taking short trades because the price is still above the moving average. So you want to make sure both are below the moving averages on both CCI and price. You would have reopened long trades there, which would have been around this area here on both strategies, and you would have closed them out on those crosses there. But overall, you can see there, and you would have avoided taking any more long trades from that point there when the CCI started declining, as I said. So avoid taking long trades, even though the price did continue to rise, and avoid taking short trades because the price hasn't broken below the moving averages. Now, I've just left the back testing there to demonstrate the effectiveness of both. Now, again, that looks promising. So again, don't fall for that worked on the average down approach, but just be mindful. You want to be always reading any bearish divergence as in this example with caution. So the stop loss approach was losing money. So the average down approach worked, but you want to make sure the price moves in your favor. In this case, it did, but you wouldn't have taken those long trades, as I said. So here are the back testing or trading parameters. So if you're trading on the 1 hour time frame, you invest per trade 1 contract, the first contract entered, and you average down limit of 15 contracts. So basically the contract entries, the first one is 1 contract, next lot is 3. You've got a total of 3 contracts now running. Add another 4, you've got a contract, 7 contracts running, add another 8, and then you've got a final of 15 contracts maxed. And every time you average down, you make sure it drops by at least 0.005% for a 1 hour trade or contract parameter. If you're trading on the daily, the average down is 5% decline. Now, trading shares is very similar. Invest per trade $1,000 per trade. So you invest first $1,000, next lot is $3,000, next is $7,000, and finally you got the max of $15,000. And again, average down by 5% if you're trading on the daily time frame, and take profit of 3%. If you want to follow the traditional stop loss strategy for trading CFDs on the 1 hour time frame, you invest 1 contract per trade, take profit of 0.003% or 3% for a daily trade if you're trading on the daily time frame, and a stop loss is when the CCI 150 turns into the moving averages. Likewise, if you're trading shares, if you're trading on the daily time frame, invest per trade $1,000. Take profit is 3%, and again, stop loss when the CCI 150 turns into the moving averages. Obviously, you can invest more than $1,000 in any of these trades, but just you've got to be very careful of the your money management and your account balance. And I've limited it to 3% take profit on the daily and 0.003, the equivalent for the 1 hour time frame, because I found if you make it too high, in other words, if you aim for a 5 or a 10% gain, often you're a lot longer in the trade than you really expected, and it just gives you a lot more turnover when you're the smaller take profit return.
To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.